Good morning, trading world. It is August 2nd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Something I want to touch on today, listening to a lot of the talking heads on TV, a lot is being said about whether we're going into a new bull market or a recession. And if you're listening to the talking heads on TV, we're being made to choose sides like you're at the voting booth. Are you Republican or Democrat? Bullish or bearish? Just like in politics, if you get too caught up in choosing sides, you miss the real objective. Right now, or for at least the next week or so, forget about being bullish or bearish and try to understand that we are in a volatile market. There will be some good bullish moves and some great bearish moves. But if you come into this environment with a pre-chosen side, you're likely to miss every move, bullish and bearish. Now I understand not wanting to take part in bullish moves right now because of risk reward. But you still have to recognize when the bulls are in the building. So you know to sit on your hands when the bulls are in control. Now, with all that being said, I am bearish over the long term. But I try to come in each day with a clean slate and trade what I see. So if bulls have the floor and risk reward isn't good enough to me, I know how to let the bulls have that dance and wait for a song that I like. Now, in volatile markets, you get violent swings to both sides, so be prepared. Understand that higher time frames have the floor, so signals on anything less than the 4-hour chart are almost meaningless. The weekly chart time frame is in control, and yesterday gave its first short signal. However, if you want to be a good trader, you can't go off lone signals. You have to have a confluence of things that work like a check and balance system, whether it's different time frames or different indicators. You have to have checks and balance system or signal and confirmation. To me, the MACD is one of the greatest indicators being used today, but it can give a lot of false signals. So you have to pair the MACD with something to help confirm the signals. Here on my basic setup, I have paired the MACD with Bollinger Bands and an RSI to confirm if we're actually going somewhere, and volume to actually confirm the signal itself. So just wanted to touch on that a bit, so to try to cut down on some of the noise about being bullish and bearish or recession or not recession. Right now, just take advantage of the good moves that we have back and forth. Now, let's get to the key levels to watch for today. Alright, here we are back with the key levels for today, starting on the resistance side. We have our jack resistance at the 408 to the 409 area. Our queen resistance 410 to the 411 area. It's going to be very important today. And then king resistance 412 to the 415 area. On the support side, we have our jack support at 407 to the 406 area. And then our queen support 405 to the 404 area, which is also going to be important today. And then our king support 403 to 400. The main thesis for today is bullish, closing above the 410.77 with a projected target high between 408 and 414. The alternate thesis is bearish, closing below the 410.77 with a projected target low of between 407 and 400. Remember, whenever there are a lot of traders stacked to one side, like it is right now on the bullish side, we are likely to get an explosive opposite reaction in that alternate thesis. The current major channel we're in goes down to 397 and up to 416. And the next major channel up is 416 to 425. There are still some very high leftover imbalances high above, which could take days to go back and get. So be very wary of pullbacks for now. Let's bring up the scenarios of the day. All right, our first scenario is our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area and find midday chop around either the queen or king resistance before spending the same energy we used going up to come back down the second half of the day. The key thing on the rounded reversal day type structure is to look for a divergence almost out the gate from the cash open. So as price action begins to move up, you want to see your indicators and volume diverge from that. So as they move, as price action moves up, you want to see a slight divergence moving down. And that divergence usually won't play out until after lunch. But all the way up until lunch, you'll see this ever so slight divergence. Also, we want to be prepared for a vice versa warning on the rounded reversal day. And that vice versa warning could look like this. We get a continued push lower off the cash open toward the jack or queen support area. Reach our midday chop sideways during the lunch hour, and then with the same energy we use coming down, we use that energy going back up the second half of the day. That's our vice versa warning on the rounded reversal day type structure. All right, our next probable scenario is our trend day down structure. On the trend day down, we open gap down from the previous close represented by the blue line. After the cash open, we start with a rally back toward that previous close, and then we find resistance on or before that previous close. And at that point, we reverse and begin our downtrend for the morning. And this is known as our golden window, which is the best time to take positions. We found our midday chop around either the possible queen or king support area. And then usually we begin the second half of the day with a head fake starting like it's going to continue the strong morning trend, and then we'll get some type of pop or rally back into the close. Not all the time, but usually that's how it plays out. So that's our trend day down structure. And the key thing to look for in recognizing the trend day structure early is that we have a significant gap away from the previous close, and if we're below it, that gap should be resistance. We shouldn't get any closes above that previous close. And as that previous close becomes resistance, that's your best place to line up a position at this resistance area. So that's our trend day down day type. Our last and least most probable day type is going to be our expansive range day type structure. We could look to set a decision area high boundary around the jack or queen resistance area before falling around the queen support, then trying to start a march back up at some point later in the day. The key thing to recognize about the expansive range day structure or any range day is that at some point we're going to cross the previous close. And it's usually set with boundaries. Your Bollinger Bands and things like that are really good to use on range days because it gives us a boundary to trade back and forth between. So that's going to be the key thing to look for on your range days. I hope this information helps. And again, I feel the most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have in each position. Again, today could turn out to be a bullish day, but you have to think about the risk reward in every move. Is it worth risking 3 points versus going down 10 points? If it's not worth the risk, don't take it. Wait on a better setup. I'd like to close this morning's pre-market out, as I always do, wishing you a positive trading day. Hope you have a great one.